Hello, good afternoon. Today we're going to talk about cyclicality. Indeed, a few weeks back, we expected risk assets to continue up until the end of March, early April. We now expect them to correct for 3 to 6 weeks and believe that cyclical assets could be worst hit. We will highlight this with commodities. We will look at oil, gold, and we will also touch on rates and the S&P 500. We will do this with our FinGraphs platform, and here we look at an investor's view, our combination of 3 graphs. A weekly graph for the perspective over the next few quarters, a daily graph for the perspective over the next few months, and an hourly graph for the perspective over the next few weeks. So on Brent, we started a strong consolidation to the downside last October. Prices went from 85 down to the low 50s in a matter of 3 months. We have since been rebounding quite nicely. We believe that we've reached support points at the end of December, highlighted by our corrective targets to the downside, and expect that over the next few months, oil should continue to rally, probably into the summer. That said, on the daily graph, we may be approaching important resistance. As you can see, the bounce has now entered our corrective targets to the upside and is moving towards its upper end, towards 70.5. We believe that from these levels, we could see some retracement into the month of April, probably towards the low 60s levels a barrel. The risk index has bounced, but seems to be rolling over slightly and would confirm this view. Now, looking at the hourly graph, the push higher that we're currently seeing is probably not quite over yet. You could see that our targets are showing that there's probably 1 or 2 days left here, and our targets are showing that we could make it up towards the high 60s and lower 70s. Yet, our risk index is already quite overbought and would confirm that we're coming towards a position where we could expect some kind of a downside reversal. So oil could take a pause during April, probably during 3 to 6 weeks. Now we look at the other side of the commodity spectrum and to gold, which is a defensive asset. If we look at the weekly graph, gold has been working a range for the last 2 years. It has rebounded quite nicely since last October, and yet could be slowly getting into a point where envelopes are touching each other again and could see some retracement to the downside. Yet we don't believe it is the time yet to expect it, and would rather see it towards the end of April, early May. Because in the meantime, our daily graph is still heading higher and quite a strong uptrend. We expect that gold could reach back into the 1340s, possibly up to the higher 1300s over the next 3 to 6 weeks. We can see this nice intermediate top that we saw in February and sense a retracement, which seems like a quite classical correction. We believe that it will soon find support to resume its uptrend. Looking at the hourly graph, we can see that for now we are still in a downtrend, but this downtrend could be getting towards its end. We can see that there's still some risk to the downside towards the 1280, possibly down to the 1260s. By then, our risk index will be quite oversold, and we believe this will be an opportunity to resume the uptrend for 3 to 6 weeks on gold. Now, another asset which has moved quite aggressively over the last few weeks is rates. And we look here at the TLT iShare ETF on the 20-year Treasury bonds. What we could see is that we've entered a very strong correction to the upside since the 4th quarter, yet it is slowly getting into our corrective targets to the upside. We believe it's going to meet resistance in these corrective targets over the next month or so. Yet, similarly to gold, the move up is not quite finished on the daily graph. We can see that our risk index is still not overbought yet and probably has still a few more weeks to move up, and that our targets are still pointing towards higher levels into above 126 and possibly above 130. So over the next few weeks, we would expect a last acceleration up on US Treasuries, a last sell-off on US rates before prices start to reverse towards the end of April. On the hourly graph, we can see a nice intermediate top here. Our envelopes are touching each other. The risk index was almost overbought. We expect a few days of consolidation, but then the start of this last move up, which could last until the end of April. Now looking at the S&P or risk assets more generally, we can see that we've possibly recuperated most of the fall we saw in the fourth quarter, and that the trend on the weekly graph is still uptrending. We expect it to continue to be so probably towards the summer. The daily graph is also heading up, possibly above 2900 and even into the 3100 zone. Our risk index is in the middle of the range, so we don't expect a drastic correction at this stage. Yet our hourly graph is getting overbought at the moment. It is accelerating up. Our envelopes are touching each other. Our risk index has entered the overbought red zone. And here also, with cyclicality, we would expect a few weeks of consolidation to the downside. So our view on the market is that we're very close to enter an intermediate correction, possibly towards the end of April. Thank you very much.